Well, Nike's muted guidance for the year will fuel fears perhaps of a cautious U.S. consumer as we head into the second half. For a look at the consumer in the U.S. and globally, let's bring back in Seth Carpenter, Morgan Stanley chief global economist. And obviously, Nike is just one example, right? We have seen the broader trend, at least in the U.S., of goods spending moderating to some extent, services spending ramping up. How does that particular aspect of growth play out in the second half of the year?
We think broadly that pattern of the slowing in goods spending, the rise in services spending, getting back, if you will, to more normal patterns that were completely distorted during COVID, that's mostly played itself out. And now we just look for general slowing in overall consumer growth over the second half of the year as we look for continued easing in the pace of job gain. So it's really going to be getting back to fundamentals, getting back to a labor income driven spending outlook. And we think that's going to continue to cool over the rest of the year.
And then additionally here, I mean, we're just kind of thinking throughout the rest of the year, where is some of the spending expected to normalize? Where for companies who have been looking across where those consumer dollars could be banked on, they're still going to have to spend in marketing efforts. They're still going to have to make sure that they are engaging with the consumer in the correct way at a time where consumers are saying, you know, in certain categories, we just don't need any more grills.
Yeah, no, I think that's fair. I think one place where there still is some residual strength in terms of consumer demand, and I will give a strong shout out to Ellen Zentner, our chief U.S. economist here at Morgan Stanley, is in automobiles. So we were talking a little bit about inflation before, and one area where inflation hasn't come down as much has been in automobiles. The amount of pent-up demand, if you will, for automobiles, if you look at historical patterns with job growth and income growth, it still looks like there's a lot of residual demand there that's going to keep automakers busy for a little while now.